Welcome students. Now we are beginning with the last topic of accountancy, that is financial statements of companies. Companies do prepare financial statements at the end of every year as per the format which is given in Companies Act 2013. Now, the principles rules that we are going to follow for preparing the financial statement is similar as in case of sole trading concerns. Only the format which we were doing last year was horizontal, but now we are going to have a vertical format as per the company's accounts. So we'll see how it is prepared. Now, financial statements are the basic and formal annual reports. Now they are the annual reports which management and external users are using for the analysis of what the company is, how much profit it has earned, what is the financial position. So we are having various users like government authorities, tax, investors, employees, then corporate management using this information for their own purpose. Now, what this financial statement includes? So you are having first income statement, which is just also known as profit or loss account, because we are preparing it in vertical format, that is showing first incomes, then will show all the expenses one below the other. That's why it is called as a statement rather than an account. So it's an income statement, and we are also showing the total assets at one block and another block which is consisting of total assets. So that is the balance sheet or position statement. The main objective of preparing these financial statements is to provide how the economic resources of business are being utilized and what obligations the business has to yet meet. Next, the information of how cash is brought in or raised and how it is utilized in a profitable manner. And the third is to know what is the earning capacity of the business. Now, this is a format of a balance sheet. So, here we are having all the liabilities, owners' funds and liabilities which are blocked or marshaled under one particular block. That's why we are having a slide which is just showing the liabilities, and another slide is there which shows us all the assets and liabilities. So on liability side we are having equities and liabilities. So first will be shareholders fund, also known as owners fund. So in here we'll be showing the different types of capital, that is issued, authorized, then subscribed, called, paid up, arrears, forfeited shares, all will be shown under the share capital heading. Next you are having reserves and surplus, which shows us the general reserve, debenture redemption reserve, capital reserve, security premium reserve, so then surplus which is relating to the current year. So all reserves and surpluses are accumulated profits which are the part of owner's fund. So both are clubbed together and total A is written and shown in the amount column. Next you are having long-term liabilities or non-current assets. Now these non-current assets or liabilities are the liabilities which are extending for more than 5 years. So basically we'll be having long-term loans and debentures or any other type of loans which are existing for more than 5 years or taken for more than 5 years. So you are having these two items which are treated as long-term or non-current liabilities. Next is current liabilities. In current liabilities you are having short-term liabilities. This is liability which is existing only for a period of 1 year. Then you are having credits, creditors, then trade payables, bank overdraft, all these are coming under this particular items. So the total will be taken at the end. So the total of all these assets, where all these liabilities have to be taken at the end as total A plus total B plus C. So these three blocks total has to be taken separately and it has to be totaled as a grand total at the end. Now coming to the assets. So balance sheet is continued. Now the assets are going to be taken. So first we are going to write fixed assets. They are taken once a while, so they are also called as non-current assets. Now in fixed assets we are having tangible and intangible. Tangible assets are assets which are going to be used for a long period of time in the business. It may be plant, machinery, land, building, vehicle, motor vehicle, furniture, etc. Now intangible assets are those assets which can be only understood but we cannot make. For example, patents, trademarks, goodwill, they are all coming as non-tangible assets because meaning is understood, we cannot touch or feel them. So the total of fixed assets has to be taken as total A. Next, you are having investments in outside securities, investments in banks, bonds, etc. So all investments have to be shown separately under the heading investments and the total has to be taken. Next, third block of assets we are going to show is current assets. In that, inventory or closing stock has to be taken, debtors and bills receivable have to be taken. If any bad debts are there, provisions has to be reduced from the debtors. The net debtors have to be taken in the outer column. Now coming to cash and cash equivalents, it is nothing but cash in hand and cash at bank which is highly liquidable. Then you are having other current assets. Apart from these, if any other current assets are existing, that has to be shown here. Next, you are having short-term loans and advances. Now, short-term loans and advances are none other than the outstanding incomes or prepaid expenses that have been made. So, the total of A, B and C, that is fixed assets, investments and the current assets should be equal to the total of all my liabilities of capital, long-term and current liabilities. So, both the amounts have to be equal at the end of the year. Now this slide will be showing us what are the total amounts or items that are included under the different liabilities under the headings which are being shown in the liability side of balance sheet. So you are having share capital, reserves and surplus, what it includes, what share capital includes, what long-term loans includes and what are the current liabilities that will be depicted. So these items will be coming under these respective heads. So just go through these. Next one, we are having the items which are related to fixed assets are shown under the heading fixed assets, tangible assets, all things which we can touch, see is seen. Next, you are having intangible assets with goodwill, trademarks. Now, non-current assets are again they are treated as the investments. It is also a non-current asset because it is so sinking fund, government bonds, mutual funds, any investments made will be coming under the heading investments. Now current assets are having inventories, trade receivable, provision for bad and doubtful debts. Next, cash and cash equivalents, you are having cash in hand and cash at bank, whereas short-term loans are having outstanding incomes and prepaid expenses. So these items you'll have to just remember because normally these items will be appearing in your balance sheet in the problem. Now we are going to see the format of profit and loss account. So in format of profit and loss also is in a vertical format where first we are going to show only the incomes and later on the all blocks of expenses are shown later on. So first we are always starting with incomes where you are having the sales as the main source of income. So if returns are given, such returns have to be deducted and net sales have to be taken into consideration. Next, any other income that is existing, that is income from rent received, discount earned or interest received, dividend received, all these are other incomes which have to be added to the sales income. If any excise duty is deducted, the same has to be reduced and the total income has to be taken as revenue A, total revenue A. Now after knowing the revenue, we have to see or accumulate the expense, record all the expenses. So first is cost of material consumed. Cost of material consumed is for manufacturing units, not in case of trading units. Next, you are taking purchases, less returns if given the net purchases. Next, you are having changes in finished stock or inventories. This is the stores that is consumed. So consumable stores is calculated by reducing opening stock from the closing balances. So you will get the stocks consumed. Now employee benefit fund has come. Any amount which is expend in favor of the employees, for example salary, wage, contribution to PF or employee benefit fund or welfare fund, whatever we are giving for the employees for their benefit is taken as employee benefit fund. Next one is finance cost. This cost includes the cost of interest that is going to be paid yearly on the loans we have raised. So interest on overdraft or interest on long-term loans, interest on debentures paid, all they are coming under finance cost. Next, you are having depreciation and amortization. Now the word depreciation will be taken for tangible assets where there is reduction in the value of such assets. Next, you are having amortization. Amortization is the written off value on intangible assets like goodwill written off or trademarks or patents written off. So those things are taken as amortization. Apart from that, if any other expenses like repairs and maintenance, audit fees, advertisement charges, rent paid, interest, so all these expenses which are not being included in the above expenses will be taken as other expenses. Next, you are having the total, now you are having the total expenses to be taken. So you will get the total expenses. Now we have to see whether we have profit or loss. So to know the gross profit, I will write it as profit before interest and tax. I will take it the total, that is the difference between incomes and expenses. So total A is total incomes, B is relating to total expenses. So A minus B is the gross profit. From this profit, I have to reduce tax at the given rate in the problem so that I will get the net profit or loss, which is called as profit after the tax. So now the below table just gives us what is the amount that has to be taken in the various this heads. So what items will be appearing in various heads is being seen. So you can just see what all comes under which particular heads. So now we'll have a problem which is going to be prepared on profit and loss. So from the following, prepare income statement for the year 2013. Now they have given land and building, trade receivables, bills payable, debentures, sales, net purchases, wages, contribution to provident fund, plant and machinery, goodwill, and the total. So all have given. So it's a mixture of assets and the expenses. So from this we are going to prepare a income statement or profit or loss statement. So adjustments given are tax to be deducted at 10%, depreciation on plant at 10%, amortization of goodwill is 24. So this is the problem. So just take down the problem and the adjustment. So before starting the problem, the points which we have to remember. Now we have to prepare the income statement, that is the position statement. For when we have to prepare income statement, the assets and liabilities which are given in the problem should be ignored. Only expenses or incomes are to be considered. So when I am considering, I should take the format of Companies Act as per 2013. Whether any head is given or no, all the heads have to be taken into consideration. Now there is a word finance cost. So finance cost is stated in the format, but adjustment or anywhere the rate is not specified. So the problem specifies 10% debentures. That means yearly we are paying interest on debentures at 10 rupees per on 100. For 100 rupees debenture we are paying 10 rupees as the interest. So the same has to be provided. Now we'll see here. Now this is the solution where we have prepared. Now we are having sales. Now sales is 15 lakhs. Other income I do not have, so we'll take total income only as the sales. Now expenses I should take, we are having purchases from the problem as it is 10 lakhs. Next I am having employee benefit fund. For this they are having 2 or 3 adjustments which is given, so I have taken the notes. So whenever I prepare certain working notes, it has to be stated in the note column and the note has to be, number has to be written. So we'll see what is the working note. So now we are having employee benefit fund. In the problem we are having wages and salaries amounting to 50,000 and also contribution for provident fund is 60. So 10,000. So total amount spent by the organization on employees is 60,000. So I have written employee benefit fund 60,000. Next, coming to finance cost. Now finance cost, I said it is not exactly stated, but they have given 10% debentures. So debentures are costing to 3 lakhs. So 10% of 3 lakhs is 30,000, which is shown in the second working note. Interest on debentures at 10%. So 3 lakh into 10% amounts to 30,000. So finance cost is amounting to 30,000. Next, you are having depreciation and amortization. So problem states that depreciation has to be provided at 10% and amortization of 24,000 has to be done. So working note 3 shows us the amount of depreciation. So depreciation at 10% on 2 lakhs, it amounts to 20,000. And problem says goodwill has to be written for 24,000. So total 44,000 has to be spent on amortization, that is 44,000. Now we'll add all the expenses of purchases, employee benefit fund, then you are having finance cost and amortization. So it will be coming for 11,34,000. Now we have to see what is the profit before tax. So I should minus A from the expenses B. It amounts to 3,66,000. On this 3,66,000 I should provide tax at 30%. Tax at 30%, which amounts to 1,09,800. So the difference whatever is remaining after tax is the profit or surplus for the year. I hope you have followed. So we'll see for some more problems in the next class, but most of the problems will be taken offline. So you can refer the same format and try. Thank you.